Welcome to TradeTheMBI.com. This is John. This report is for the 21st of October, and the juggernaut continues. A little bit softer. The action is definitely getting slower, and we're still looking at rather weak volumes, but we're now matching highs here. Shakeout reading 8.39, the peak from the previous high. We can look at that. It was 1135, so it should be on pace to make a higher shakeout on higher highs when it breaks the high here. So that would be consistent. We are reaching this super mondo move right here, 48.7 on the MBI magenta, which is like way up there. But you still have MBI red straight up, that's long-term buyers. The green is mid-term buyers, still above all the shorts. There's really been almost no short activity since, well, going back right over here, we dipped below. The last active short day was back on the 6th of October. So you can pretty much see that, you know, there's just been no interest whatsoever in attacking upside move, just because there's just that much money sitting on the sidelines, and we've talked about it with new pension fund money and all that was coming in. It was just a perfect opportunity for them to jump in when the Fed said they were going to continue their bond purchases, and no adjustment to the quantitative easing despite inflation. So this gives them the opportunity of saying, hey, we got that factored, as well as the premium of being able to borrow money for nothing. Where else are you going to put it to get any kind of yield? Where that differential comes in is as this inflation starts to go and the warning signs about a year-end recession start to amplify, and we'll probably start to see those readings coming in here at the end of the week now as more earnings get reported and the conference calls talk about supply disruptions, as well as the impact that inflation is having on their ability to transfer costs to consumers, and it's already looking like that's going to be a difficult case. So, market's still pricing in, added gains, but most of that I think is inflation based. It's not really about growth at this particular stage, but we'll get that confirmation shortly, and once it's in, that could create really a dynamic reversal. That would be very interesting, because you'd have half the group saying, I got to move into safe, asset protected treasuries, and that's where I think you would see an even bigger move into cryptocurrencies, because they're still using that as an alternative to gold, and that's where that would take off. Euro, slight push up here, middle 1.6s, but still within that 116.8 range to around 111 is optimal zone. If it gets beyond that, that's really a sad indication. But the Eurozone's already in recession, so that's already a beginning signal there. And it's only going to get worse because they're passing additional green initiatives, and they don't have any resource to make up for the energy gap. It's an interesting thing to watch. Treasuries, interest rates are rising. Whether or not the Fed is doing anything about it, this is the 20-year Treasuries, the yield's rising. That's going to draw more people to the security. Now we'll see if it's able to continue the dip. But when you see this oil making new highs going through here, that's 4-6 months down the road inflation in record numbers. From our 50K chart, we had the buy setup that took place at 44.67, now at 45.25, so it's going to continue to make new equity highs within that, and just it's the same run right here of just a solid MBI white below the 10 level. Pretty much this entire spacing, and as long as it's below that red, it's going to continue to rise. Now, it won't take much. We're at 477. The threshold we usually have marked for the Opus 2T here is at 5. So it wouldn't take much to lift that up, but you would need to see red dip here. The last time it popped over 10 was the end of yesterday, and there really was no impetus behind it because we were so far above with magenta and yellow. But now you're looking at magenta and yellow below 33 level. So that move above 5 is going to trigger a change in the overall viewpoint, and that could be the weakest portion. Again, when I can show yesterday's and all of today's action within the single screen here, that's light volume. So we've had 3 consecutive large up days here on ever decreasing volume. That is not a bull case. You have to see some kind of big punch, or at least some form of short activity where they're selling, because pretty much now you're just not seeing any selling. So it's sort of like a little bit of buy goes flat, a little bit of buy goes flat, and then we had one significant dip that we had that signaling on from the dots here that showed up clearly, and trailed across for quite a while before it broke down. But once it broke down, it was a clean move and came pretty close to that 0%. We had a couple of spikes here of the white MBI, the latest happening midway here, but it happened with no spike in orange DOC, which we look for as an impetus to drive it beyond maybe a 5-point move, which is exactly what it produced. It was actually a little bit more than that, but consistent with that. Right now we have the spike of MBI white collapse right here, and a little bit better spike of orange. So potentially in the overnight market, we could see a little bit more shade of price. But overall, all the action's simple and easy for now. I think it's just going to start getting a lot more complicated as we approach the end of the month and we start getting clarity as to how soon the recession starts and potentially how severe it could be. As always, though, trade well. We'll talk again later.